Hey guys, welcome back to this YouTube channel. Now it's already April and we're going to look back at the data for March. So if you're planning to buy or sell in the next 3 to 6 months, this data report is going to be extremely helpful for you to understand where you are in the market and when's the best time for you to make a move. Overall, March has been an absolutely crazy month, extremely busy both for buyers and sellers. Because while we have a lot of inventory coming on the market, all of that is being quickly absorbed. And you will see in this market report how that applies to different types of properties in the market and also different areas, different regions within Calgary, because every area operates differently. Before we get started with the report, it's Iyer, your Calgary Realtor. So if you are planning to make a move in the next 3 to 6 months, whether it's buying or selling your place, make sure you reach out so we can set you up with a game plan. Because again, while we go through this report, everyone's situation is different. And so we need to customize the strategies specifically to your situation and see what's best for you, because it's not always the best time to buy and not always the best time to sell. So to kick it off, we start by taking a look at the summary by the Calgary Real Estate Board. As we can see here, March reflected a strong seller's market and price increases. So going over the highlighted points, which are extremely important, sales rose to 2,664 units, 10% increase year over year, and a much higher increase than the longer term trends. New listings did pick up over the last month. The 3,172 listings that we saw were still below what we typically see in March and not enough relative to the amount of sales happening to drive any enough change on the supply situation. So in March, the sales to new listings ratio actually rose to 84%. The months of supply fell below 1 month, and that is extremely tight. If anything, below 1 month, we saw that happening in townhouses only for last month, but now we are seeing this across the board. Not seen March conditions this tight since 2006, which is also the last time we reported high levels of interprovincial migration and a month of supply below 1 month. So obviously this is exactly what's happening this time around too. And that's the exact reason that's putting a lot of pressure on the Calgary market. The interprovincial migration, the amount of people moving, the amount of people wanting to buy homes in this market right now is just not enough compared to the amount of supply that we are seeing. Inventory levels have declined across properties, price below $1 million. With the steepest declines occurring for homes priced below $500,000. So while we do have inventory coming on the market, the real problem areas are everything priced in the affordable price range, which is sub $500,000, depending. And then for detached, potentially around the $650 range. And this is where all the buyers are crowding and trying to find properties, but the inventory is just not matching up. Inventory 22% lower than last year and half the levels we traditionally see in March. That is extremely low. Total benchmark price rose to $597,600, a 2% gain year over year and a nearly 11% higher than the same time last year. So with all of this, where do we land with the total benchmark prices for different property types? As you can see here, the total residential price benchmark went to $597,600. That's a $12,600 increase month over month. So the longer you wait on the sidelines, that's the premium you're going to pay every single month to not make that decision. For a detached home, that's $739,700 as a benchmark price, an increase of $18,400. For a semi-detached, $658,000, that is an increase of $18,900 month over month. For a townhouse, that's $448,000. I remember the time we were surprised when we crossed even $400,000, but it seems like there's just no stopping for the row townhouses because that's the affordable part of the market, and people don't feel that they are compromising by just buying an apartment. So with month over month, we are seeing a $12,200 increase, and for apartments, we are at $337,700. Benchmark price, an increase of $8,100. So the longer you wait on the sidelines, that's the premium you're paying for each property type to be able to make that decision. And buyers are moving extremely fast in this market. So the more clarity you have, we run through all your questions, your needs, and we iron out the exact details of what's best for you right now. Moving on to the benchmark prices by region. This is extremely important depending on which part of the market you're planning to move into. And it also gives you an idea of the affordability index of different parts of the market, right? So, for example, if you move into the most desirable regions, which are Northwest and West, you're looking at anywhere between 649 and 719 as the benchmark price. And you can see the month over month increases are 8,300 for Northwest and 16,400 for the West. So slight drop in the price increase, but it still remains the top preferences, both for renting and also people who are moving in with families and kids. On North, we are at 570, 700. Northeast, 516. City Center at 612. East is at 436. Significant gains compared to last month, which was low at 2,900. So now we're at 12,400 increase. So a rising tide raises all boats, and so every single part of the market is benefiting from this surge in property prices. Southeast also going up to 584 and South at 585. So on the West side, we are seeing an increase of plus 15,000 again, 3 months in a row now, after that huge 20,000 drop that we had in December. So all parts of the market are benefiting from these price increases. And the longer you wait on the sidelines, irrespective of which part of the market you're trying to get into, it's all going to go up together. Taking a look at the benchmark price month over month, how that's been performing together with the inventory and the sales numbers. As you can see, in March, we've actually hit an inflection point where the sales are more than the inventory. So we are selling more than what's on the market. And you might ask how. So basically, all of the new listings are gone, plus additional in terms of the inventory left on the market is also being eaten up. So the sales being higher than the amount of new listings coming on the market is just not enough. So obviously we have hit that inflection point, and that's going to, what I think is going to happen, and you're going to see it in the next month's report. You're going to see a huge surge in property prices, probably an even more upward tangent, which is almost hard to believe, because as you can see from December onwards, we were essentially heading a little sideways with a small upwards curve. But the rate of change after that point, so for all my clients who bought houses in December, congratulations, you pretty much nailed it. After this point, it's going to be even more and more difficult as we get into the year, because the spring market's here. Taking a look at the different stats that are actually contributing to these numbers in more detail. So as you can see, the sales, 2,664 sales for March, up from 2,135 the previous month. New listings are at 3,172, up from 711 the previous month. And inventory, you can see at 2,532, which is also up from the previous month, which was at 2,355. Now, as you can see, the inventory increase is not as much as the sales increase. Sales increase is almost 500 versus the inventory increase is barely 200. And so that's where you're seeing that difference of everything just being absorbed off the market, and inventory is not able to keep up. When you look at the months of supply, that's a clear indicator of where we are at in terms of being able to supply houses to the buyers that are in the market right now. So if no new listings were to come on the market right now, we are sitting below 1 month. So that is at 0.95. We used to be at 1.3 2 months ago, and then 1.1, and then that dropped below 1 now to 0.95. That is extremely, extremely tight. As a market, most properties are actually gone now within 2 days of coming on the market. Taking a look at per property type and how these stats apply. Overall, I'm not going to read into exact numbers. Feel free to pause and take a look at the screen. But you can see the year-over-year percentage changes. While we are seeing increase in sales, huge increases in sales, the new listings are far lesser, especially for detached and semi-detached. We are actually negative, and that leads to negative across the board when it comes to inventory, which then leads to sales to new listings ratios that are extremely high. Now, anything above 85% is a red flag for that property type. You're going to be very competitive. And for semi-detached, we are actually sitting at 96%. So overall, our months of supply across the board are all mostly below 1. Even apartments barely struggling to keep up above 1. We are at 1.06. So everything is extremely, extremely challenging right now. Taking a look at the summaries per property type. Feel free to pause the screen as I go through these. I'm not going to read every single point, but certain things are very important. So as you can see here, the most significant fall was in the lower price point. So 71% of all available inventory in March was actually priced above 700,000 for detached properties. And where do you think all the buyers who are trying to move to Calgary for an affordable market into detached are looking? They're not looking above 700. They are all looking below 700,000. And that's just 30% of the market. So clearly there's not enough homes for those buyers. So if you're looking for anything above 700, you're possibly going to have lesser competition. It all depends on the areas. Again, if you're looking at Northwest and West, those remain competitive, but higher your price point, the lesser your competition. When we come at semi-detached, you can see inventory declines have been driven mainly by properties priced below 600,000. So that's where everything's been absorbed for semi-detached. And so if your budget for semi-detached is above 600, you're going to have an easier time, but below 600, it's all being taken off the market. Taking a look at row townhouses, inventory levels were 12% below last year and 53% below the longer term trends. So the decline in inventory was driven by properties priced below 400,000, as inventory levels rose 35% for units priced above 400,000. So again, extremely challenging at those price points. And finally, apartments. The March sales to new listings ratio of 82% and a month's supply of 1 month, right? So the first quarter, record high sales of 1,940 units. We've already sold in 3 months, 1,900 units. That's extremely high, 31% higher than last year. Taking a look at months of supply across the board, this is just a clear indicator of where you're going to face the highest amounts of competition depending on the property type you're looking at. So for detached, east and northwest, that's where you're going to face a lot of competition. For apartments, you're looking high competition in the north, southeast, and east. Semi-detached, east, south, and north. And for row townhouses, north, west, and southeast. In terms of total sales, as you can see, the sales are pretty much highest we've seen since 2010, except for 2021 and 22. Now, 22 is what started this whole thing of interprovincial migration and the high amount of demand that we have and now in Calgary. So obviously 2022 sales are going to be far above, but you can see in terms of even the area preference, how that's changed over the years. But we are very close to 2021. And I think when you look at the year-to-date numbers in the coming months, we are going to supersede that because we're already in the spring market versus 2021 was different. Looking at the total inventory, while sales were comparable to 2021 and 22, our inventory is nowhere close to anything we've seen since 2010. So we remain, again, extremely low inventory across the board, and this chart shows that. Total inventory by price range, this is extremely important. So while we have inventory, some inventory, the bigger problem is really where that inventory lies. And so the red lines I've drawn here is where we were at last month for each price range. And so you can see all the way up till 700K, the inventory for Northwest, West, and North remains extremely tight. And those are high demand areas. So high demand areas within 700K, which is usually most buyers' affordability range, is extremely tight. Now, if you can either stretch beyond 700, then that opens up more options for you. Or if you can look into other areas, if you're open to buying houses in Northeast or city center within different price ranges, then your options open up to you. But how does this compare to the actual sales happening? So the sales happening across these price ranges, as you can see, the huge increases in price ranges all the way up till 700. That's where really most of the sales are happening. Clearly sales for areas in the low inventory, which we talked about as Northwest, North, are more than the inventory available. So the sales are happening in those areas, but it's eating up all the inventory plus all the new listings that are coming on the market. So keeping the inventory extremely low for those areas, especially Northwest. As far as the benchmark price goes, this is the best tool for buyers. Pause and take a look at the screen. Overall, what you want to do is decide a budget and decide a house type. And then that will essentially tell you which parts of the market you can actually afford. So for example, if you're looking at a detached property and all you can spend is about 600,000, then really the only options you have are east and northeast. Versus if you wanted to not move into those areas, then if you are able to go into semi-detached, now within 600,000, you have almost 6 different areas that you can pick from. So this helps you get a good idea of where your affordability index lies when you consider different regions across the market. Taking a look at the price increases that we are seeing across from all the way to from Jan 2023, you can see that now we sit at 597,600. That's a $58,000 increase in 1 year. So if you delayed your decision by 1 year, that's essentially your cost, and that's way more than or down payment, right? So you've essentially sacrificed an entire down payment by just waiting a year. And if you waited since Jan 2023, you actually gave up 77,000 on the benchmark price. And that is crazy to imagine in a year that you would see that levels of increase. And I actually think we are headed again for another year of double-digit percentage increases. So could we hit 700K by year end, or maybe even more, driven by rate cuts? I think so. Looking at the city of Calgary total new listings, and this is by property type. So year to date, as you can see, we are nowhere close to the 10-year average, but also you can see the amount of properties coming by detached was way more in 2022 versus what we've had in 2023 and 24. So we are not able to keep up to the amount of demand for those regions. And as you can see, the total sales also happening relatively close to where the new listings are. And what does this show you? This is very different because the last 10 years, it didn't really align with the type of new listings coming on and the sales happening. But now they're so closely aligned because buyers are taking whatever they can. Every single property listing that's coming on the market is being matched with somebody who's willing to either compromise or pay more and go up on their budget and take that property off the market. So everything that comes goes, and that's why we are seeing such a close alignment between the new listings data and the sales data. Taking a look at the total sales by price range, as you can see across the board, from 2022, 23, 24, 24, clearly all the sales are now being driven into those higher price ranges versus in 2022 and 23, you had a more distributed sales ratio in the mid-range across the $1 million range. Taking a look at the total prices, the benchmark prices are consistent with the increases seen in average. So this signals a very consistent overall momentum that will just continue through the year. Because if the average price is also pushing up, it's people paying more money on average for properties, right? So there's clearly a very strong market sentiment that will drive up then the benchmark price, and both of them will continue that inertia as we head up into spring. City of Calgary total months of inventory, as you can see, the longer trend continues to head down. And especially since the start of the year, we are seeing lesser and lesser inventory each month because the amount of buyer interest has dramatically increased. And if last year shows anything, that will continue all the way down till potentially summer, where we will see a small shift up. And then as we head up into autumn, more people will take those properties off the market. And then as we head back into winter, you potentially might have a little bit more inventory. But again, compared to longer term trends, it's still nowhere near enough what we need for the buyers. Now, taking a look at just the overall best gains versus worst gains across the city. This is one of my favorite things to do, just to look at where the most people made money versus others didn't make as much. In this kind of market, there's really no losers because there's no negatives anywhere. You're making money irrespective where you buy a property. But quickly taking a look at detached properties, city center and south saw the highest gains, north and northwest, lowest gains. When you look at semi-detached, highest gains in city center and east, and lowest gains in northwest and southeast. In terms of the row townhouses, highest gains in northeast and west, and lowest gains in city center and north. It's crazy that the lowest gains even are at like 2.27% month over month. And when we look at apartments, Your highest gains are in northeast and east, and the lowest gains are in north and northwest. Now, just a quick fun stat. In March 2023, we saw 1.2 billion in sales. And in March 2024, we are already at almost 1.6 billion in sales. Of course, that's nowhere close to the 2022 numbers where we were almost 4 billion plus. But this is still crazy to think that 1.6 billion in sales, and our months of supply this time last year was 1.33, which is again still extremely low, but now we are below 1. So it's going to be a crazy market in the next couple months. Make sure you reach out and set up a game plan, because you got to have the right strategies. You got to have someone on your side who's not only looking at properties on the market, but willing to go out there, knock some doors and talk to some people, get some off-market listings, because really sometimes that's the only way to find you that property without getting into bidding wars on things that are on the market. Taking a look at what is really driving all of this change, the Calgary population chart. As you can see, ever since 2020, it's just been a much steeper climb up there, and the percentage year over year, while we are seeing a slow decline towards 2020, 2030, 2035, but right now the amount of demand is nowhere close to the amount of new houses being constructed. If you look at the housing starts for 2022, this is a great forward-looking indicator. So if you are on the side that believes that things are going to ease out and maybe next year it'll be easier to buy properties, the biggest challenge you got to look at is, are new lands even being bought and are new houses even being started? So you can see a huge drop from 2022 to 2023 in the amount of houses that starts, right? And that predicts what's going to happen for essentially the next 3 to 5 years, because that's how long it takes for the land acquisition, all the permits, starting construction, and it's a forward-looking indicator of what the inventory is going to look like. So unless a lot of people who actually already own properties come on the market and sell their properties, but even they need to buy other properties. So if we continue at this rate in terms of the amount of interprovincial migration, then there is absolutely no way that prices are going to come down. So I think this is, if you have another view on this, I would love to hear it. From what I understand, for the amount of population growth right now that Calgary is forecasting, we need 13,600 homes per year. And right now we are only constructing 13,500. So this does not even account for the houses that need to be demolished, the infills, all of that stuff doesn't come into this. So there's clearly a requirement for more inventory, a problem across Canada, but clearly looking into Calgary, we are facing the same issue. And here, looking at the property type distribution, as you can see in terms of the affordability index, obviously going back all the way to 2020, there was a huge demand all the way up to 60% for detached properties, because people could afford and buy those properties during that time with extremely low interest rates. And then as we headed into 2022, you can see that influx in towards condo apartments, townhouses, and semi-detached even to a point. But clearly detached has just weaned out till now, and we've dropped all the way down to 43%. Condo apartments have gone up from 17% back in 2020 to 31%. And so it's a clear longer term trend. So I do anticipate that apartments and townhouses will have another amazing year in terms of the property gains, until we reach an inflection point where I think we will start having more of a sidewards movement with a small gain up, just because certain properties might not make sense to a lot of buyers, depending on the affordability index and what they're willing to pay to actually move from one province to another. And that's a discussion for a whole other video. So make sure you subscribe if you are interested in that kind of data. And that is everything for today. As you can see, obviously a very crazy market. So make sure you reach out. My link's in the description. I would love to just break the ice, get all the hi hellos out of the way, like I say, and have a casual chat My buyers usually love this introductory call because it gives them a lot of perspective. We run through different parts of Calgary, what different communities have to offer, what the price ranges are, what the competition looks like, how much above list price they need to go. Because let me tell you, if you are looking at properties on realtor.ca and you think that's what the property is listed for and that's what you're going to get, let me tell you, that's not what it goes for at all. In fact, in March, there was a property listed for $531, and I estimated the property value to be actually closer to $600. And so we bid around the $580, $590 mark. That property within 2 or 3 days saw 20 offers come in. And in 3 days, it sold for $635. So it sold for $110,000 above its list price, and not just above its list price, but also for more than what the estimated market value was. And guess what happens? That now sets the new benchmark for that area. And so when the next property comes on market, what's the next seller's expectations? That they're going to at least get $635. And so if you missed out on that one, now you're going to pay $645 and then $655. So with each property that sells, it's not just time, but with each property that sells in an area, the prices are going up. And at some points, it doesn't make sense to buyers to pay that much money above this price. But when you begin to understand that if you do not pay that point, then you're going to pay even more than that for the next property, or you have to compromise because you started getting priced out of that property type. And that is the market that we are looking at. So make sure you reach out. Like I said before, we go through everything that you need for you and your family, figure out a game plan, because sometimes you don't need to get into that perfect ideal property today. What you need to get into is get into the market, get some gains, and sometimes there's other strategies that set you up for a better future versus putting everything on the line today for a $900,000 property. And so depending on your personal situation, there's a different strategy, and I would love to walk through that with you. If you like this video, like content like this, make sure you like, subscribe, and show your support so I can help more people like you and this video gets shown to more people. And look forward to more videos through April. And sorry for my voice today, a little sick. I'm not sure if you can tell. So I'm losing my voice as I have been speaking for the last 20 minutes. But I look forward to seeing you guys in the next video.